You're now tuned in to the Desire to Trade podcast, a show where we bring you the best figures of the trading world and teach you how you can become a successful trader. This is your host, Etienne Crete.
So welcome to episode 40 of the Desire to Trade podcast. Now we're going to look at a topic that isn't really sexy. By definition, it's not the topic that's most interesting in trading. A lot of people think that trading is a lot about setup, about being a trader, but there's a few things you have to think about that are not necessarily as sexy as entering a trade. So the topic today is risk management. But my guest is excellent. My guest, Michael Toma, is excellent at talking about risk management. He wrote a book, and he makes the topic really, really interesting. And as you can see, it's not only about stop loss and position size. It's much more than that. There's much more to cover. So I'm sure you'll learn a lot today in the podcast. A couple of things to mention now. The goal of all this is really to help people discover the podcast. And the more people can listen to it, the more positive impact we can have on the world. And that's the basic goal behind the podcast. It's not just about sharing information and having interviews. It's about making an impact on people. And by leaving a review, you help me a lot to reach more people. So keep doing it. And again, if you're not in the Facebook group, check this out at desiretotrade.com/group, desiretotrade.com/group, and you can join the Facebook group for free. Now with the interview. Hey, what's up, trader? Today I'm with Michael Toma, and we'll talk about a topic that we didn't talk about a lot. Although a lot of traders mention it, but we didn't touch on it specifically, it's risk management. So what's up, Michael? How are you doing?
Very well, Etienne. Great to be here.
Yeah, I'm pretty excited today because we're going to talk about a new topic that we kind of touched in a few interviews before, but not specifically overall. So I'm really happy that you're going to talk about that today.
Sure. I'm looking forward to it. It's a very interesting element to trading, which, again, it's somewhat overlooked. It kind of takes a back seat, but I'm glad we can kind of put it in the forefront tonight.
So how would you define risk management, first of all?
Well, it's an interesting concept, and basically in trading, in the trading environment, it has somewhat of a unique definition. Let's look at risk management, or look to two words, risk and management. Risk, in a sense, is, and we'll just define this sort of very simply, is a chance of loss, right? A chance of losing something. Obviously, in trading, most people will think, money or loss of a trade. But really, you could think of loss as, loss of opportunity, loss of time, loss of an asset or a business, things like that. So when we think about risk, we're thinking about the chance of losing something. And what I'd like to maybe sort of alert the viewers of this interview is think about risk during our conversation, not just about a trade, but how we sort of manage our business as a trader. And we'll get into that more and more as we discuss the concept of risk. But for the most part, we're thinking about what can I lose on something? And there are many varieties and aspects to that. But again, it's not just about losing money on a trade.
And so management would be what would be reducing the risk or something different?
Yeah, really, there's three main components of this risk management concept. One, and you just talked about, is what can I lose on a trade or in this venture? But let's look at the three concepts. The first one is identification. So first, we want to identify, is there a risk in what I'm doing? And again, in the space of trading, what am I thinking about here? Am I going to lose money on a trade, or what about the impact to my business as a trader? Okay, so we're going to identify. The next step we're going to do is assess. So if we identify that I can lose $5 on a trade, well, when I assess it, it's really not that big of an impact. So I've identified that I can lose something. I assess that, that's not that big of a deal. I can absorb that. And the last stage, the third part, is controlling risk. Okay, so we're going to identify an issue. We're going to assess it. And then we're going to find ways to mitigate or control that. So obviously in trading, we want to look at two elements. One, the trading aspects of your daily trades. But again, more important, and I'll keep kind of resurfacing this concept, I want the traders to understand, think about your business as a trader. So what are the things you identify in your business as a trader that can force you to, in theory, end your career or, blow your account. And we're going to assess that and say, okay, well, when I do this, this, and this, I put myself at risk for those events to come true. And then we're going to look at that and say, okay, we've identified those issues. We've looked and said, hey, this is a problem. And now look at ways we can control so we can minimize or at least mitigate those events from occurring.
Sounds like we're going to learn a lot of stuff tonight. But before, I just want to go into, how did you get into risk management?
Great question. I love talking about it. Actually, I was, and I still am, a risk consultant for some Wall Street firms, and I do a lot of work for insurance companies, and I've been doing that for about 20 years. And I did a lot of claims work, some process improvements, things like that. And as the financial world was being uplifted by some of these scandals, a lot of the needs for these companies were to get more involved in regulation and compliance. So they kind of forced me to a path of risk management, and then I achieved my certifications in risk management and all be that. But I really thought about it, and I said, I was trading at the time as well, and I said, these principles, these risk principles, really can be applied to my trading business. So what I did was I took them from the corporate world and then applied them to my trading, and all of a sudden, the losses were less, my track records were better, my win-loss was better. So, and then all of a sudden I became a, quote, better trader, but I realized, what, my business as a trader is also doing much better. So I was kind of forced into it from the corporate side, but it was almost like a blessing where I actually took those principles and made it successful in a business that, as we would say, is the greatest business in the world.
Mm-hmm. And how did you get into trading in the first place?
I just caught the bug. I was one of those, even when as a teenager, I was, one of those geeks who would pick up the Wall Street Journal and, just read up on things. And I was just fascinated, like everyone in this business. I mean, let's face it, we're fascinated by the lights but then when you get a taste of success, I think there's sort of an inflection point in one's career, and you see the traders who want to just do it because they find it exciting. And then others who look at it as a business and saying, okay, what are the components I need to be successful at it? And they're just looking at charts on weekends and really putting all their strength and mind into it. That was me. I was really just so focused and, obsessed with it in a sense of being successful. And believe me, it didn't happen overnight. But I knew if I put the time in, I would know the elements of what I needed to do to be successful. But truly, I just enjoy this work. I enjoy, and it is a job basically. But I enjoy it. I love talking about trading. I love helping others. But more importantly, I just love the lifestyle that it delivers. And I've noticed, I'm a big avid fan of your podcast on Desire to Trade, and you see that's a common element of the successful traders. They just love what we do.
Mm-hmm. Yeah, it's so true. So tell us about your lifestyle then.
Right now, I gotta tell you, and you could really parallel this to my trading results per se. And, after a while, I mean, my trading results are pretty consistent and, somewhat on automatic pilot. But I have found, at least looking at it psychologically and dare I say spiritually, when I'm in more of a balanced state of my lifestyle, I just trade better. I just don't worry about, trades going bad. I know what I have to do. It's sort of like a project management like approach to trading. I just know when to execute according to my plan. And, I think having balance, I mean, I have a lot of good people in my life. My family is, knock on wood, healthy, but, wife is good. I got great friends in my life and, some special ones that, in the past year have become a big part of my life that's helped me not only become a better trader, but really a better person. So, when I'm in that balanced state, I kind of feel like I'm just kind of just so in the zone in trading, and I don't let things like losses or setbacks just bother me. And I've been in a stage where that has bothered me, and you could really you can know on a spreadsheet exactly when you can parallel the balance in my life to that of my trading results. One other thing I want to add too is, one of the great things and successes about this business is it allowed me to kind of do things that I've always wanted to do. And, I've always wanted to have, a nice home by the beach and things, and really kind of live a lifestyle that really I think we should be rewarded for taking the risks in this business. And that's also, I sort of reinvested in myself through my trading success by doing the things for me and my family that I've always wanted to do. So that also again makes me feel good and about this business, and again the return on investment for all that hard work. And Etienne, this is not easy, this business. The ones who get rewarded are ones who put the hard work in, and just proud to say I've done that.
Definitely true. So I guess you'll have to guide us through risk management, because the two things that come to my mind when I think about it are, first of all, stop loss and then position size. So how does that work overall?
Okay. Well, stop loss is probably, when people talk about risk management, it's probably the number one topic that comes up. I have some interesting views on the infamous stop loss. And, a lot of times when I speak, I get challenged by this and say, well, I don't use stops. And, the first thing they're going to say is, oh, here comes the risk manager saying, what are you, crazy? No, you can't do that. You have to have stops on everything. I will say this, for a majority of the trading community, you have to have them. One, because what did we just talk about earlier? Identify, assess, and control risk, right? The business risk. We need to protect our business risk. And for those with average size accounts, whether you're trading forests, futures, stocks, options, we just have to do it. And sometimes it's sort of our nemesis, but we need to have some type of protection, whether it's catastrophic or on the individual trade, just to protect our business. And it doesn't always work statistically. In fact, one can argue, and I've done a lot of statistical analysis, where not having stops and having them pretty much is about even, and that's including the overall results, and that's including those big tail risk ones for those who don't have stops. But I have to tell you, the big principle is, and I don't want to miscommunicate to your listeners, because if you're not going to use stops, you really have to have a very, very large size account in proportion to the amount of shares or contracts or that pips that you're trading. Incredibly big ratio. I'm talking, say, $1 million account on a futures account where they're trading like 2 or 3 contracts tops. That is not practical for most of us in this business. So in regards to stop loss, yes, I'm a big proponent of it. But here's the thing that I find that challenges a lot of people. What they do is they think about stop loss as how much I'm willing to lose on a trade. Well, newsflash, the market really doesn't care about how much you want to lose on a trade. So what I highly suggest is put the stop at a location, and again, there's a lot of variables how we can determine this, where you're wrong. If the trade is not working out. So I'll put stops on at certain places, say, for example, above the previous day's high or low, okay? Or at a major, I use market profile a lot to complement my my strategy. So, once it hits the value area high or low and it goes outside of that range, I know this isn't really working. So I look at the market and say, okay, here's my stop. You want to stop me out? Go ahead. But you're going to have to break some major inflection point to do it. And it's sort of like a safety zone there. It protects me catastrophically. Actually, even on a regular trade, it will do that. But at the same time, keep me in the game. And remember, Etienne, we talked about this, just a few minutes ago. It's the mindset is protecting my business. I really don't care about that trade. The markets are random. I'm going to have losses and gains all day and all week. But nothing can impact or assess my trading business. So keep that in mind when the traders are thinking, where do I put my stop? Don't think about the dollar risk. Think about where you're wrong. And if that dollar risk is too much for you, skip the trade.
Mm-hmm. But then I guess this is where you're going to adjust your position size, right?
Oh, absolutely. And position size is another controversial concept. I hear it a lot, and I hear from some good traders, professional traders. Now, I'm going to load up on this high percentage trade or something like that. Mm-hmm. Position size is, well, let's put it this way. One of the questions I always ask traders is, why do you want to increase your position on this particular trade? You think it's high percentage? Well, okay. Well, if it's a high percentage and you have a low position on it, a small position, you're still going to be successful. So why is it? Well, is it greed? Possibly. I mean, certainly that exists with all of us to a degree. I don't think, there's always a little greed in all of us here as a trader.
Mm-hmm.
But I think the key concept to remember with this position sizing, and I'll tell you a kind of a methodology I use on how to determine position size. It's really not the proportion of risk that determines your position size. It's the very existence of risk itself that should limit it. Okay? I hope that everybody understands that concept. So the fact that risk is present, which it is on every trade that we do, that alone should determine we need to limit our position size. Don't worry about the high probability of success on the trade. And even if it's way up there, keep your regular position size. You're going to be successful anyway. Okay. Now, the argument would be, well, I can make more money, Mike, on a high probability trade. That's possible. Very possible. Here's my way of looking at it through a risk perspective. Have your strategy or strategies lined up. And what I want traders to consider is keep it at a certain position size, preferably a low one, right? And earn the right to increase your position size through results.
Mm-hmm.
Okay, sort of like a graduation plan that I call it. And I've write about this a lot because it's an important concept. But the key element, and this is a risk concept, it's sort of an enterprise risk for your business. It prevents the trader from having to decide what position size should be on a trade. It's already predetermined. You're going to have a certain number of trades, and once you hit a threshold level where you say, okay, I've reached a certain goal, and that can vary between traders, but after so many win-loss percentages or so many pips that you gather, okay, now that gives me the right to, quote, graduate to another share size level. And then when it doesn't work out, you reverse back to the norm. What it's doing is it's allowing you, and by the way, this could be done for multiple strategies. So you may have one strategy that's taking off and you're at a 400 share level, and maybe there's one or two that you have high hopes for, but it's still at the 100 share level. What is the strategy forcing you to do? It's allowing you to go increase your position size on the more successful trades. It's kind of like employees that you have in your business, right? And this is our business. Our trading account, in a sense, our strategies are the employees of our business. Well, what am I going to do? I'm going to promote the employees that are doing well, and the ones that aren't, I'm not going to promote. And actually, I may end eventually, get rid of them, fire them.
Mm-hmm.
So it's an interesting concept, but I think the key takeaway to this is a lot of questions I have about, well, I want to load the boat on this one or go max size on, a perceived high percentage trade. And I always say, if it's that good and that consistent, eventually you'll get there. So have a little patience and sort of let the process, lead you to success. This is, I always say, try not to think too much with this stuff. I mean, the market randomness will really limit any major successful setup and even help you on setups that maybe don't look that good. Over time, you'll see which employees are working for you best, and then you promote them through a higher share size.
Mm-hmm. So you say we should always keep the same, let's say, dollar value per trade for every single trade at the beginning, right?
Yes.
Okay.
And if you want to argue, if you really sort of kind of are excited about a certain strategy, but you want to try it in like a simulated environment, that's fine. But yes, I think it should all be the same. And again, this is from a risk person talking. So I am somewhat conservative. But, again, we're looking about making you successful in your business as a trader. This isn't just about having a great week. Okay. So yeah, right, we're chuckling a little bit, but we know what you did. We see traders like this all the time. I had a great week. Well, good. That's great. Talk to me in 3 months.
Yeah.
And, so yes. And you keep doing that. And again, if you're successful with it and, there's various ways to measure success. And we could talk a little bit about compliance in a little bit, but how when that keeps improving, you're going to graduate to higher levels. And honestly, after a while, the ones that are really successful, the biggest, a new identified risk, remember identification, assessment, control. The new identification is, you know what? I'm becoming really successful at this strategy and I'm at, say, a 4th or 5th level. I'm getting uncomfortable. I'm getting a little nervous when I push the button now because I got a lot of share size on. So now, because of your success, you've now identified a new risk. And now we have to, assess that and control it. So sort of like this vicious cycle, success cycle. But that wouldn't we all want to have that problem, right?
Yeah. So it's just a better problem to have. Yeah. So that means the first step is then to define how much you're going to risk per trade, right? That's like the first step of everything.
Right. And I would use for those. I try to keep things simple a lot. And if you're looking for that magic potion, obviously the account size is going to play a big role in that. And also, your comfort level is also got to play a role. But, the default answer to that is not about how much money can I make. It's about keep it the lowest level, whatever it is. One contract. I mean, the ES futures on a good volatile day, you can go crazy on one contract, or 2 or 3. And again, remember, you'll be increasing those as you become more successful. So the default answer is, it's not about how much money you need to live at the end of the week. Very dangerous strategy. So keep it small, work your way up. And again, this is sort of a free look to determine, think about the ones that don't work out for you. Maybe they're great strategies or someone used them or you read a good book, but you just can't execute them well. Well, you're going to learn or pay a very small price to know that's not working if you use this type of methodology, as opposed to, wiping you out.
So would you say then that you have to think about risk in terms of percentages instead of dollar?
Percentages is, personally, I love taking dollars out of the equation.
Okay.
Try really, if it's a trading plan or a trade journal, I very rarely, unless it's for disclosure reasons or it's for a partnership fund or things like that, very rarely do I actually put dollars in any type of measuring or metrics or measuring performance. Even on my trading screens, I have all dollars, references to money. I measure the trade in ticks or pips or whatever it is. I don't want any dollars in there. And percentage is a great way to look at it. But again, even if you have a whatever is a relatively small account or 25, 50,000 account, percentage is really percentage of what? Percentage of the account? Well, just trade the minimum size in the beginning and you could work your way up.
So you could define percentage of your account, right? And then you decide a small percentage at first. Is that what you say, or? Yeah,
I would say that, but I would lean towards start whatever the minimum thing is. So if you're trading stocks, for example, 100 shares, 200, and again, even if you have a bigger account, why do we have to rush to start trading 5,000 shares? I mean, it's just like it tells me, it identifies, again, that word identifies an exposure, a risk that, why do they want to start at 5,000? It's there's something behind that I want, as a coach, I want to dig deeper into.
So I guess it's probably greed at that point, right? People want to make money fast.
That's my first red flag. And I'll just ask them, why do you want to do that? Well, most of the time they're going to say, I can make more money.
Yeah.
Again, money, another red flag, another concerning word that I have on it.
So how long should traders stay within the minimum risk, let's say, per trade?
Well, how long should they do that? I'll let the results determine that answer. So I usually, I prefer, if you're an average trader making 3 or 4 trades a day, I like to look at, if you're looking at, say, results, just to keep it simple, maybe if you have a net plus 15 trade. So, if you're having a net plus 1 winning trade every day, you're looking like maybe 2-3 weeks or a month. You can even almost graduate to the next level. Of course, this is assuming your winning trades and losing trades are kind of about the same dollar loss and stuff. But if you want to extend that to say 20 or 30 trades, if you're a little more patient, that's even better. But remember that the performance and the randomness of these trades are going to eventually get you to those higher levels. So I don't want you going too fast, again, be patient. It's a learning process. And remember that, if you go too fast, and I've seen people do it, and they're successful, but they'll go too fast, that other risk comes in where they all of a sudden start to get scared because they're trading higher size. And, they start making decisions that are going against what originally allowed them to become successful. The key risk, they start taking profits too early. And then that all of a sudden now you have, a higher win percentage, but you're maybe not making any money. So that, that becomes a concern.
Mm-hmm. Now, though, there comes a point where we talk about risk, we kind of define everything, but then we have to comply to it. We have to be compliant. So how does that work?
Yeah, my personal, that's my specialty, risk compliance. And really, where all the things I've taken from the corporate world and brought into my trading world, I believe that compliance is the most important thing as the success of a trader within the risk management space. Mm-hmm. Compliance is real simple. It sounds like a very regulatory type word. Are you executing your trading plan effectively or as it's intended? All right, so, and most of the time, it's very rare, difficult to get to 100% there, but you really should be in the upper 90s. But the compliance metric and how you measure compliance, that should be in your trading plan. The win-loss thing, I know everybody has that in their columns and maybe a P&L type metric. Yeah, that's great, but think of your job as a trader, but think of it as being a project manager. And I don't know if, some of the listeners, they worked in an office or a corporate setting, and maybe you were working on a project. Well, what is a project? It's an assignment that has a beginning and it has an end. And you're just supposed to really the project people are designed to just execute tasks, develop something or create something or do something, process something. That's all we're doing here. We have a plan, and what's our job? Execute the plan. That's the job of a trader. It's not about charts and finding, market profile levels. That's maybe part of it, but our job is, this is our plan. My role as a trader is to execute that plan. And the better I do it, the more successful I will be, period. So most of the things I measure are going to be compliance. That's the biggest. And if you're not compliant, there's, again, identifying exposure, identifying risks that I need to work on certain things. But again, compliance, key thing. Let me give you one example of how you can measure compliance. Okay. Say you have a rule that says, I'm going to quit at the end of once I reach a certain point target, regardless if that's a good metric, a good goal or not. Well, all of a sudden now it's you've hit your target at 10:30 in the morning, and you got 5.5 hours to fill. When you push that button, if you have a compliance metric that says I'm not going to do that, you're going to start thinking before you push that button. You go, uh-oh. All of a sudden the demons are going to start watching you, things like that. So, and again, a lot of these decisions are based on your historical performance or historical back testing of things like that. Maybe it's not prudent for you to stop if you reach the goal at 10:30 in the morning. Probably not. So you want to obviously make your trading plan to reflect the things that are going to optimize your account. But the one thing I would say about compliance, and it's kind of like a boring concept in a sense, but I love it, reward yourself. So if you are compliant for the month, regardless of your P&L, reward yourself. And, I started rewarding myself with little things like, I'm just going to take the every rollover day off 4 times a year. That's just my little treat to myself. Or, maybe get myself a nice little massage or things, and then those rewards build up. And now, now you're taking trips to Vegas. And so these are the things that, this business is, it's a lot of fun, but it's very isolated in a sense. And I think we need to have sort of little promotions in a sense that reward us for being compliant. Mm-hmm. We're not rewarded here for P&L. We're rewarded for executing our plan effectively. And, I would encourage every trader to think about that, rewarding themselves for compliance. And trust me, you will think twice if you're going to chase that trade or you had a bad trade and you want to double up. You're going to think twice saying, you know what, this is going to kill my compliance metric, I'm going to stay away.
I think you said it exactly right. Like, this is probably the most boring topic there is ever in trading, but it's probably the most important one, right?
Yes.
It's probably the single thing that's going to make the biggest impact in your trading.
True. And, I try to make it fun. I mean, I hope,
Yeah.
By now at this point in our session, people are saying, it is kind of dry, but, there are some things, and I always say if they could pick up one or two items out of this, maybe it's the identifying things, the problems in their trading, or this compliance thing, graduating, we talked about position sizing. They take away one or two concepts of this. It's pretty interesting stuff. And again, it's not just about stop losses.
But tell us about compliance. How do you track it? Is it like a grid that you have where you like check off every single day you're compliant, or?
Yeah, actually, I have a grid for lack of a better word that really monitors, reflects my trading plan. And so again, your compliance is, am I executing my trading plan effectively? So I'll have, and these are sort of risk components, filters, for example. So say filters, what they do is minimize frequency in a sense. So what it does is saying, okay, I have, I could average 10 setups a day. Say I'm trading Forex or something. Well, if I put a filter that says, don't trade during major, EU news announcements. Well, now all of a sudden that filter is going to reduce the number of trades I have, but also going to reduce probably improve the potential, reward of that strategy. So I'll have filters. So do I comply with my filters? Rules, in a sense, again, risk concepts. Rules are basically risk avoidance. So I will not do this during this time. That's you're putting yourself where you avoid trade. So what you're doing is filters and rules kind of allow you to focus on hitting the sweet spots in all your trades. Then the other concept of compliance is risk controls. Okay. And those may be, for example, say, we talked about size limitations. So maybe I'm going to have my brokerage platform to limit the number of contracts or shares that I can trade at any given time. Those are from a risk perspective, those are the best because they force you. I mean, you could push the button all you want, but the broker is going to say cannot trade, or it just locks your account up. Or my very favorite one, a daily loss limit per day, and then your platform freezes, gives you a chance to chill. So it's great to have a coach, great to have a partner to kind of oversee these. But the greatest part about this business, Etienne, is we're self-independent. We don't have a boss. You know what the worst part of this business is?
We don't
have a boss. Yeah. So we have to be our own boss. And that's difficult. I mean, that's difficult in any space. So if we can use electronic controls, i.e. your broker and your brokerage platform, to help with your risk management and improve your results, bring it. That's a great concept.
I guess one of the problems people often have is trading with boredom. So when people are bored, like they kind of trade to make money or they want to get results fast. So is there a way to overcome that?
Yeah, there is. I mean, boredom trades are just classic. I mean, we've all done them. Boarding trade. How about chasing entries?
Yeah, definitely.
That. The worst one, making up for a loss. These are psychological concepts that really need to be addressed. Again, risk identification. We're identifying these. So if you trade out of boredom, chasing entries, making up for losing trades, things like that. Very interesting and challenging concepts because they're difficult to eliminate through electronic controls. There's a sort of a human element to it. But how do we do it? We can set certain type of rules in our trading plan, and you can use some types of oversight. For example, again, how about no trades for 20 minutes after a losing trade? Now, will that help you with your results? Maybe, maybe not. But again, the concept of doing that, it takes the sort of urge to make up for a loss, out of the equation. So you're adding some controls there. Maybe you're missing out on some good opportunities, but this psychological, these risk issues, they could be devastating. Boredom, again, I think what boredom is doing, the one you addressed, is if someone trades their onboarding, it's saying, I'm doing something that's against my plan.
Mm-hmm.
So if you're bored, but your setup and your plan is setting up, well, then you're going to take the trade. But if you're doing it and it's not part of your plan, then clearly it's a non-compliant event. So if you track compliance, you're going to have numbers that are going to be terrible. So now what happens there? Okay, I'm not going to reward myself. Maybe the penalty is I have to shut down my platform, things like that. So, and to be honest with you, if it gets to the point where you can't really manage that properly, I'm a big fan of oversight. You could have a coach, a fellow trader, dare I say, the worst compliance person in the world is your spouse.
Yeah.
You do not want to go there, because let's face it, what's the thing? What do they say at the end of the day? I love my wife dearly, but what's the thing what do they say at the end of the day? When you come home, someone comes home from work, you say, "Hi, honey, how was your day?" And nobody say, "Oh, it's good. We had a meeting, this and that." What do they say when they say to a trader, "How was your day?" What is the trader thinking? How much money did I make, or how much money did I lose? Why is that? We're both, two people career-minded. We both have jobs. Why does one person say that and no one's thinking, "Uh-oh, how much money did I make?" So, instill a little fear. A lot of people I interviewed for my book and everything, the fear was, I don't want to tell my wife I lost money. Well, use that as your fear thing. So you know what? I'm going to be compliant. And I'm going to hand in a report, and I encourage everyone to do it physically. I still do a monthly report, even on accounts that I don't have to do that, because I want to show myself, like as a self audit, that. And one of the metrics? Compliance metrics. I got to be in the 90s on that compliance thing, because you know what? I don't deserve to be in this business if I'm below 85% there. It's just, this is a privilege to be in this business. And if traders aren't going to play by the rules or play by the rules for success, I've told traders, I don't think you're right for this business.
Mm-hmm. I'm just thinking, would the fact of having not to lose money make you overtrade at some point?
Oh yeah, sure. Sure. If you're not losing money, it's the bug. It's again, if you're successful or having some winning trades, that sometimes is worse than having losing trades, because now you're just like, this is my day. I'm the king of the world, and now I'm just going to pushing buttons because all the things are working out for me. Again, it comes down to compliance with your trading plan, because you're going to have those days where we've had them where just things work out well, and other times they take your stop and they rip the other way, and it's just very frustrating. I'm again kind of repeating myself, but like just a big proponent of executing your plan with precision. Again, we're all fired from being traders now. We're all going to be project managers going forward, and our job is to execute our plan. Simple as that.
I like that. That comparison. Project management. I think I had a couple of guys in project management, so they're probably going to be good at that.
Good. Yeah, really, and they'll probably attest it and say, this guy, this Mike guy from Jersey brings up a good point. He's like, it's simplicity. Like we're trying to make this as simple as possible, because there's so many dynamics to trading, many of which we cannot control. It's the market doing its randomness thing. So let's focus on what we can control and let the markets do its thing. Because remember, we're just little, the market is this huge monster, and we're just like a little like insects trying to grab a crumb, right next to the big monster's feet. We don't want the monster and he'll let us do it. Pick up, but if we start going head to head with them, they'll crush us. They're going to absolutely crush us. So what we can't control is market randomness and things like that. What we can control, though, is identifying opportunities, identifying issues that we have with our trading, assess them, are they a big impact, and then taking steps to control those, mitigate them. So in a sense, we're becoming better traders not by trading better, we're becoming better traders by eliminating the things that hurt us.
It's all about that three-step process, right? I see it like coming every single time. So repeat it again so that people get it in their mind for like forever.
Oh, sure. I mean, the project concept, or
Yeah, the process, the 3 steps.
oh, sure. Identification, risk
Uh-huh.
identification, assess, and control. So we're going to identify issues that we bring to light, right? We're going to assess them. Is it really going to impact my business as a trader, right? And most of the time it will. And then we're going to, okay, now what can we do? I've identified it and assessed. What are the steps I'm going to take to control them? And we talked about rules, filters, electronic controls, such as with the platform. And again, and we're going to measure that through compliance.
I see very well how this is something people have to do like continuously, right? So like every month or something, they have to, I guess, review that once again, right?
Yeah, absolutely. I think, I've been, a risk guy for 20 some odd years. And so it kind of comes like, naturally. But yeah, I mean, I think if you just repeat those concepts and even, I'll even go one step further, like say a trader is listening to this and saying, you know what, I kind of like these concepts a little bit. Just put, if you have your trading plan in front of you or your daily worksheet where you're going to track your trades, just put 3 words: identify, assess, control. And maybe it's just a little trigger to start thinking about these things. And like I said, if you just kind of take 1 or 2 of these concepts and it helps you, I think that's well worth the price of admission.
Mm-hmm. Any other advice you have for people about risk management?
Yeah, I think one, it has to be a part of this business. If you're going to be in this business and just enjoy the lights and want to just like let it ride and all these type of like gambling mentality, I got to tell you, this is a very privileged business. It takes a lot of work. And Etienne, I'm sure you've probably spent hours and hours on weekends looking at charts and things like that. I said,
Yeah.
what kind of takes me back is a lot of the people I talk to today, or some of them, they are expos. I meet them, and they just don't seem like they have that passion to want to put the effort and time in. And whether you want to be, a really good surgeon or a really good trader, it just doesn't come. You can't just read a book and do this. So I would encourage everyone to at least have the concept of risk and this concept of risk management somewhere in your plan. Envelop it into it. Do you have to go crazy like myself with all these, statistical measurements and things like that? No, but maybe it's just kind of adding the graduation plan concept of position size to your arsenal. So, I'm going to start small, and then work your way up from there. But I got to tell you, this is one of those businesses where it's difficult to cut corners. It really is. But it's a great opportunity, this business, to simplify things. And we talked about being a project manager. So, baby steps, but this is just one of those businesses, unlike, say, I don't know, retail or things like that. You really need to have the concepts of risk in place and be able to measure it effectively. Because I really, haven't seen too many successful traders who don't apply some of these concepts. Over the long term, be successful.
Mm-hmm. I think corners are really, really easy to cut, but they're dangerous to cut, right?
Oh boy,
Yeah.
And they're dangerous to cut. But here's the reason, the thinking, and I hope you agree. There's corners all over the place in this business.
Yeah.
The problem is not the corners. The problem is there's so many corners.
Uh-huh. Okay.
Yeah.
So tell us about your training style today, exactly.
I am a quote unquote day trader. I really like to be flat at the end of the day. Preferably, I trade mostly the ES futures, which again, I just love it because it matches my lifestyle. It's 24 hours. You could have some pretty good swings overnight. So if there's some times where I'm on a corporate risk type of engagement, or if I have a meeting during the daytime, I'm up real early and I can pretty much have a full trading day by 8 a.m. So it matches my lifestyle, and the leverage is good. You don't need huge accounts, and I think it's just I think you'll say this too about the forex that you specialize in. you just get to know a particular product and you got a good feel of it. It's so difficult to sort of write about that, but I hope you agree. Like Forrest, you just get this feel, like you just know the product really well, and I think that helps out in the results column.
Yeah, it does take time, but yeah, you get to know something for sure.
Yeah, and I know the little nuances. Like I know when maybe some big players are stepping in, and you could just feel it, and you know when to maybe get out before the the big banks are stepping in, and it's just maybe I'll take my target a little bit earlier because I can justify it because of certain events. I just know like the ES futures is a great what they call a reversion to the mean type product. It kind of goes up, stop, reverse, down, up, reverse. It kind of has this reversion to the mean. And I'm a big fade type trader. When the markets are rallying, I'm not saying I'm going short, but I'm starting to think about shorting. Like I'm thinking about when are these traders going to get exhausted? So I just like that sort of mentality. And the ES futures is perfect for that because it's just always kind of most of the time it's just reversing back to a mean, so to speak. And that's why I'm also a market profile trader, because I just love the concept of profile because it really is a reversion to the mean sort of platform guideline for these type of traders. I'm not saying I'm not a trend trader, but I do like to sort of take advantage of panic. So when I see a move starting to be had and it's really in full force, and then I start to see like some of the newbies with their one contract starting to really like catch because they're always the last one to the show. To me, that's my like, okay, I'm gonna sell it to them because I'm gonna go short, and I'm gonna make sure because when the market starts to reverse and they're panicking, I want to ride on their panic. I kind of one of my big setups is kind of taking advantage of little newer trader panic because I know that concept because I was one of them at one point and I was one losing money. So I says, let me get on the other side of that trade. So I kind of enjoy that kind of setup too. I feel bad for the little guy, but I just we all have to learn, and it's but again, it's a fading mentality. It's very kind of difficult to for trend traders to kind of think like, wait, you're going to go short here? What are you, crazy? Well, I'm not going to load the boat, but what I'm saying is that there's a time where a move is exhausted, and if I can catch that early, or at least anticipate at an inflection point where I know at least there's going to be some decision points, I'm willing to step in there.
Mm-hmm. So tell us a little bit about your book and how people can find you.
Oh, well, the book it talks a lot about these concepts we've talked about today. It's called The Risk of Trading, and it was published by Wiley a few years back. And I just felt that, there's a lot of trading books that talk about strategies and setups, and there's those in there as well. But I felt there wasn't a book really focused on this type of specific element of trading. And again, it's successful, but I'm very proud of it, and I'm proud of the work. And the concept has evolved a lot, and the trading community, I guess, especially with some of the younger millennials, they're really catching on to this risk thing. I mean, I've noticed when I first started, there was a big gambler's mentality to trading, and I'm very impressed with some of the younger groups. They're very calculated in their decision-making process, and really that's kind of risk management at its finest. More power to them. Welcome to our crazy world of trading. But again, maybe they can reach me. A lot of it's through your site. I do a lot of work with again the Montreal Traders Group, and also probably by the time this is launched, I also have a fund on collective2.com, which is titled Globex Nation, which does a lot of you can monitor my trades through Globex Nation, which does a lot of them at the overnight Globex overnight sessions for the ES futures. So there's ways to participate in that, but also you can observe. Collective 2 has a good platform where you can just observe those trades, for free, and just see how that's going along. So that's something I've always wanted to do. A lot of times my trading and corporate work really take a lot of my time, and I try to have as much balance in my life as possible. But this interesting space with app development and a lot of people just say, I don't have time to trade, but I kind of just want to let it auto trade, so to speak. I was very skeptical of those traders in the past, but this is, you got to give the people what they want. So Collective 2 is a great platform, and I'm glad to be a part of that.
Then this brings us to the next question, which is what goal do you have for the future?
Oh, interesting. My trading goals, I'll say my trading goals have rarely changed from 10, 15 years ago. My number one trading goal, I'm sure you can probably guess what it is to be compliant with my trading plan. The number one goal. That is my trading goal. It always has, and I got to tell you, at this point in my career, it probably always will be. It's never a monetary goal because I know if I'm compliant, the monetary part will follow. My sort of professional goal in trading is very interesting because I feel like there's always room to grow there. I'm always willing to expand to other products, but for some reason I've always stuck to my ES futures baby. But I've I do some bonds and some crude. And again, in your specialty, the Forex, I mean, I'll give a little plug to Desire to Trade. That's the place that I really feel that I want to kind of help with my my Forex trading. But I guess the other thing too, my goals is to just become more adept to the new technologies that are coming out, particularly with. I mean, you could trade anywhere now. You can be in a in a park in Montreal or New York City and sit there and just be trading on your tablet. So it's pretty cool stuff. And, I find myself in my lifestyle needing that more and more, that flexibility. So not only just to be a part of that, but maybe even develop some applications for that.
Sounds really interesting. So what's keeping you motivated to do all that?
I love the game. I love the business. And as much as I love corporate life, I would go crazy if I had to do it the rest of my life. So, one of the fears is, and I think one of your other I was listening to one of your other guests a few weeks back is, the fear of having to go get a real job. I mean, I kind of chuckled when I heard that and I go, in a sense, like, what's your motivation? Fear is my motivation.
Yeah, it makes sense.
Once you get addicted to this lifestyle, it's a great job. It's a great business. It is a job, though, I will say. But once you get the bug, it's kind of difficult to let go. And I just hope my goal, in a sense, is to always love this job because sometimes, people from the outside see this, with the lights buzzing and, they think there's like $100 bills coming out of the computer. It's not always that case. And it's a very isolated business. So when I mentioned about balance before, trading all the time, it just becomes very isolated, and your friends are through social media and stuff. And I said, I kind of like to go to the office sometimes and get a little hug from my coworkers, and hear what's going on about a little office romance and stuff. I mean, that kind of breaks it up and makes it fun, and I again balance in my life, and then. But I tell you, if I had to stay, too much in the corporate world, I would go crazy. I mean, I need my charts. I need my platforms.
Yeah, the lifestyle too. Yeah.
Yeah, it is. But I got to tell you, it's not like I definitely treat it as a job. I'm focused. I'm really not that excited about, like, even on really good winning days. It's kind of like I dial it in and say, okay, I recognize that, but I try to keep it as mechanical and project-like as possible. And then I save the excitement for the rewards, such as the trips or, the beach house and things like that.
Mm-hmm. No, I really like that. I think a lot of people can recognize themselves into that, exactly what you said. Yeah.
Yeah.
So I'm just going to remind the listeners that all the show notes are going to be on desiretotrade.com for the podcast. So if people want to find the links, everything we talked about, it's all going to be on desiretotrade.com. And people can also find the Facebook group at desiretotrade.com/group. I think it's a great resource for traders to connect together. And Michael, I have one last question for you, which is, if you could give only one sentence of advice for traders, what would that one piece of advice be?
Ooh, great question. I got to tell you, simplicity. Don't let your emotions drive decisions. And there's so much noise in this business. Let the data, let your historical data, your back testing, Let the results drive your decision-making process. Okay. I think this trade's going to do well, or I like this setup. Those are all emotions. Those are all emotional verbs. Be statistical. Be data-driven. All right. The answer to your question in 2 words: stop thinking. Don't think too much in this business. Keep it simple.
I like that. So, Michael, it's been a pleasure to have you here. I think people will have a lot of great advice. I think there's a lot of stuff to apply as well. So, it's been a pleasure to have you here. I think people will grab your book as well because it's a really good book. So, they have to do that.
Yeah, sure. That'd be great. And Etienne, great job. Pleasure to talk to you. And again, keep up the great work over there at the Desire to Trade.
Yeah, really, so for all the listeners, I'll see you in the next episode. Ciao. All right, guys. So I think the message of this podcast is pretty clear. You have to really be simple, and you have to incorporate risk management to your trading business, basically. It's not only about trading, it's about being in the business for the long run. So make sure you apply something from the podcast. And once again, I'm leaving you with a piece of music from my friend Daniel Osor. If you guys want to have custom-made music for your business or anything, check out the Danny Boy Experience, the Danny Boy BOI Experience.com, and you're going to find all this great stuff. Check this out. Enjoy the week. Make sure you do the best of it, and I'll see you in the next episode, episode 41. Ciao.